Before we start, just understand this is not a signal service. Everything you see here is for educational purposes only. Trading involves risk, and the goal here is not to follow trades, it's to learn the process behind them.
Good morning, and welcome to I'm the Trader Capital live trading for law. It's Friday, y'all. First and foremost, all glory to the Most High God. Let's bow our heads for a quick prayer. You know what it is. Just take you to church real quick, because without Him, we're nothing. Without Him, I wouldn't know what I know now. So let's praise Him, give thanks, and let's get into it, all right? Our Heavenly Father, we thank you for your grace and your mercy. We thank you for another opportunity to try again to learn and grow in these markets. Father, we ask that your will be done today as it is in heaven. Father, we ask that you give us the heart of a giver and make us a lover of our neighbor. Please let me not lead anyone that listens to me astray, but use me as a vessel to bring your children back onto you. In Jesus' mighty name we pray. Amen. 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 Can the church say amen? Boom. Amen. Let's begin. Before we jump into the charts, I just want to say this. There was a time I used to sit down on the charts with no real plan, jumping between strategies, losing, blowing accounts, second guessing every entry, and honestly just hoping that the trade would work. And that's where most traders are today, not because they're not capable, but because they don't have a structured process. The biggest pitfalls that causes traders to fail is that they have no knowledge on money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. 90% of traders fail. All 90% are plagued with one or more of these pitfalls. Today, I'm going to show you the 3 pillars that every trader must have in their trading to survive and thrive in the financial markets, so you can join the 10% who succeed and fast track your way to the top 1% of the wealthiest people on this planet. It's called the 10% to 1% club. Let's go. Woo! But before we dive deep into the 3 core pillars, when you step into this arena, on this battlefield, you must first have 2 crucial realizations. Realization number 1, trading is war. This is not a get rich quick scheme. This is the hardest thing that you'll ever do in your life. Realization number 2, all traders are money managers. As a trader, your ability to manage money is vital to your survival in this industry and in life as we know it. Most traders think that success in the markets comes from finding the perfect strategy or catching the biggest moves. But the reality is, trading success is built on 3 core pillars. First is money and mindset. This is the foundation of success. Then is risk management. This is the holy grail of trading. This is what will keep you in the game long after everybody else has quit. And lastly, we have trading edge. This is where all traders start. I know this because this is where I started. That's why in today's session, we're going to hone in on your trading edge. Now, everything that we do here is built around one thing, and that is confidence in your trading edge. And I am the Trader Capital. Our confidence comes from 3 things. First, it comes from understanding how the market actually operates. Not what social media says, but how money truly moves. Second is having one trader model. One model with IPDA signatures that we trust and execute on a consistent basis. Third is having a plan and a process, because without a plan and a process, you're just reacting to price and you're winging it each and every time. And this right here, this session, this is where we focus on the 3rd piece, the process. So many people lose confidence in trading and in life because they simply don't have a plan. There's no process they're following. There's no procedures and protocols that they're abiding by. They literally are just winging it. and they wonder why they can't get consistent. They wonder why there's ups and downs in their equity curves. They literally can't figure it out. The uncertainty of not knowing exactly what you're doing, how you're doing it, why and when you're doing it in the market will cause you to fail in trading. Confidence and certainty are key if you want to be successful in trading, and it's your responsibility as the trader, as the analyst, as the fund manager. It's your responsibility to attain that confidence, not only in your model, but also in your processes. So what I want to do right now real quickly is I want to share with you the process that we teach all our analysts at I'm the Trader Capital, and then we'll see that process live in action. This is the 3-step trading process. Step 1, condition. This is where we determine our bias. Before we even think about entering a trade, we need to know the market program. Are we in a buy program or sell program? This is where the market shows its hand. Then we have step 2, stage. This is what sets up your trade and what does your trade look like. There are 2 types of trades, retracement setups and continuation setup. Then we have step 3, execution. This is how you're going to enter, manage, and close the trade. At I'm the Trader Capital, we have 4 entry criteria before executing. I'm not here to force trades. I'm here to execute my plan step by step in real time. All right, let's get into the live trading flow. Now, as you're watching, don't just look for entries. Pay attention to the process behind the entries, because this is what will get you into the 10% of traders who succeed. And if you want to go further to the 1%, well, that's where we break down all 3 pillars inside of the program. I used to think that winning trades built confidence, but it's not the wins. It's knowing exactly what you're doing, when you're doing it, how you're doing it, and why you're doing it before, during, and after each trade. And that is what we're building here. Let's begin with our daily trading processes. Weekly target going into this week is 3% as usual. We're still yet to find a week where we hit that, but that's okay. As long as we have a target, you know, we're aiming for that target, right? Because if you don't have a target, you're aiming for nothing, all right? You're always going to hit nothing every time. Mental check-in, feeling generally okay. Excited to see what price action has in store for us today on this last trading day of the week. Excited to continue to grow and get 1% better. I feel like this week has been just, every week has just been impactful. Like I'm just learning, I'm growing, and I'm getting closer to what I'm looking for in price. Like I said, the first 3 days gave me exactly what I wanted. Yesterday, I took something from yesterday as well. When I looked back at price action, when I analyzed the data, there was an opportunity for me to catch a retracement setup. But as of right now, obviously we're not taking retracement setups, but I'm getting a better understanding of what I'm looking for in price, where I'm the location of where I'm looking for in price as well, when I want to wait. And now like, I'm getting to a point where I'm letting price come to my location. You come to me. This is where I want to get in. And when it gets there, that's when I will anticipate my setup. And if I don't see it, then I don't do anything. So yeah, it's been a very impactful week. So I'm excited for what price action has in store for us today. Get that 1% better. I accept any risk that comes with trading today. I understand that trading comes with real risk and that losing is part of the battle. News is Friday, August 14th. All right, we had high impact news come out at 8:30, medium impact news coming out at 10. So we have news today, making it an optimal day to take a trade. Risk going into today, we're at 0.25 of account size, and we have a max of 0.75 per account per day. I'm thinking of tape reading this morning. Okay, I'm not going to be entering any trades. I'm going to end the week, all right, end the day, end the week with a good tape reading session today. So no trades for me today. We'll just be tape reading. Just the 2 trades I've taken this week, and that's about it. 1 loser, 1 winner. But the loser, we took a lot from. Really, I shouldn't have been in that one, but we move, we digress, and we progress, okay? Weekly program has been established as a buy program, okay? Started off in a sell program. Took Monday range high, all right, buyers changed to a buy program, and we've been in a buy program since. So let's go ahead and review price action overnight to see if anything's happened to change our weekly program. Then we'll go ahead and adjust our higher time frame ranges, okay, and we'll get into our 3-step trading process. Different day, different week, same processes, all right? What I do doesn't change, all right? Might sound robotic, but I'm doing the same thing over and over again. That's what you want your trading to be like, right? You want it to be boring. Successful trading is boring. You show up, it's like your job that you've been at for 4 years. You show up, you know what you're doing, and different days, different people, different interactions, but what you're doing, the core foundation of what you're doing remains the same, right? That's how trading should be. It shouldn't be a surprise every day. You know, your heart shouldn't be racing, and you shouldn't be like full of adrenaline. But anyway, nothing's really happened. Still drawing liquidities up here. Magic magnet doing its thing. All right, it's all in the magic magnet. It's not even me, you know what I mean? Happy Friday, y'all. Happy Friday, Mr. West. Y'all don't know about Wild Wild West up in here, boy. I'm trying to get guts like him, mate. Anyway, let's carry on. Like I said, nothing's really happened in price to change our weekly program, okay? For our weekly program to flip again now, all right, price will need to come all the way back down here, take the sell side here, which I doubt is going to happen, okay? It's Friday, yeah. Draw liquidity is up here. Let's see if it gets hit today. 20-day needs adjusting. The low is fine. The low is fine. The high is now yesterday's high. Previous week obviously stays the same. 3 days, 3-day, 1, 2, 3. Low stays, high goes here. Yesterday's range, high is also here. That's a little high right there, isn't it? Shit. If you're using previous day's range, all right, we've taken previous day's high, all right, so we'll be coming into today in a buy program, which is in alignment with our weekly, okay? Well, I don't know how you determine your weekly, but with my weekly, it's in alignment, okay? Yeah, this is still the draw on liquidity, all right, depending on how price behaves there. We have these two relative equal highs here, but really, I'm targeting 40-day high and 60-day high, relative equal highs here. Two clean of highs there. Yeah, that's it for that. Just to the higher time frame ranges. We trade time-based ranges, right? Depending on your style of trading, right? If you're a scalper, a day trader, short-term trader, swing trader, position trader, which I don't recommend, or an investor, which I don't recommend. Anyway, it's just my opinion. Depending on your style of trading, will depend on the time-based range that you use, right? To determine your weekly, to determine your condition and what you trade off of. Okay, so for me, I day trade, so I use current price action I use from the current price action 12 a.m. to 9:15 to determine my daily condition. Okay, obviously I look at the higher time frame ranges to have a higher time frame perspective on price. And then based on the range, I wait for one side to get taken, which gives me my bias, my condition for the day. And I maintain that bias until the other side of the range is taken, okay? So I'm not like I have conditions in terms of when my bias change, what confirms my bias and when my bias changes, okay? Not just every fluctuation in price, I'm like, flipping bias. My bias remains the same until the other side of my dealing range is taken. Low to high. Let me get the... And we're kicking off. Small open range gap there. It's below price, okay? So we gapped up. So we have a premium gap up. Tapped consequent encroachment. Ding, ding. Go retracement there. Let's see what today brings. Let's see what Friday brings. Bon dia. Buenos dias. ¿Cómo estás? ¿Cómo estás? I think I said that right. Did I spell that right? Did I spell that right? I think I'm writing that, innit? It's Friday, y'all. Yo, I miss our little segments, though. I miss our little segments. Oh, see. All right. I gotta get my Spanish game up, you know? I gotta get my Spanish game up. I wish I could have an alert on that. In the middle, like on the 50% range. Sí, señorita. ¿Quiero qué? ¿Quiero qué, mami? ¿Quiero qué? I'm watching this retracement based on 20-day high, based on yesterday's high, based on last 3 days high. You're in 850 macro here. 3-4 retracements up here. Came back into the inefficiency here. Oh, I was thinking about thank you in Spanish, and it just came to me. Gracias. Gracias. Can't spell that though. That is so wrong. Gracias. Is that how you spell that? Gracias. I just spelled it how I say it. Gracias. 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 You have a gracias, mate. It's Friday, y'all. Last trading day of the week. Fridays upset me because the market's closed, but it's all right. We need a break. We've been needing that break. Mondays are like the best days. Mondays, markets open, or Sunday opens up. Monday, we're live and kicking off. You know, we're popping off in the charts. Everybody hates going. Majority of people don't like Mondays, but you know, traders, we love Mondays. We love every day, to be honest. Especially when you're hitting, you know, when you're like, when you know what you're doing and like you're consistent with it. Every day is a great day. Every day is a motherfucking great. Can't nobody take away my high. Nobody, mate. Because we in the best motherfucking industry in this motherfucking world, baby. We have the best jobs. Also the hardest job. But once you grasp it and you master yourself, woo wee. This is the place to be, mate. You just have to master yourself. And that's the toughest thing to do. That is the toughest thing to do, but it's a worthwhile journey to embark on. Okay, so we trace where is equilibrium for order. Equilibrium for order. Where is it? Down here. Okay. It's also 20-day equilibrium as well. Should be. No, it's not 20-day equilibrium. Alice. 3-day previous days. Like, it can't be previous days equilibrium either. The highs are the same. Doesn't mean the lows are the same, girl. Come on, get it together. I see previous days. Oh, it's all the way down there. Okay, cool. So neither side of our dealing range has been established yet. We lie. We other way live. Other way lie. It's Friday, y'all. Right now, I'm looking for a draw to previous day's equilibrium right here. So that means we might take dealing range sell side, completely filled in open range gap here. I'm saying that based on this 850 setup here, using 20-day high, previous day's high, the last 3 days high, right? Trade up to it, come down, take minus buy side above it, market structure shift back below. At 9:30, we come back into the market structure shift as well, and into this inefficiency here. All right. So this would be a retracement setup. Not for me though. Obviously, I'm not active at 8:30. If you're active at 8:30, then you would have caught that, but so we're still waiting on step one, condition to be established. Okay, but obviously depend on the range you're using, which also depends on your style of trading. It's a time-based range. Okay, depending on your style of trading, will depend on what time-based range you're using. Okay, so if you're a short-term day trader, you can't be a short-term day trader. What the hell? Short-term trader. Trying to combine the two. If you're a short-term trader, meaning you hold trades, for like 2 to 3 days, right? 2 to 3 days, then I would recommend using Monday's range of that week, right? And entry, like looking for stage set up on the 1 hour and the 15-minute time frame, right? If you're short-term trading. Day trading though, obviously that's what I do. That's what I specialize in. Okay, I use current price action, right, from 12 a.m. to 9:15, right before kickoff, before 9:30 kickoff. High is high, low is low. Yeah, it's not for me, innit? I'm giving the people options. They don't have to do what I do. It's about your personality, right? Matching your trading style to your personality, your time constraint that you can offer to the market, your risk tolerance, right? Because obviously different trading styles have different risk tolerance, right? If you're trading off the 15-minute and the 1 hour, your risk is, that stop loss is going to be a bit fat. You know what I'm saying? It's not going to be a small stop loss. It's going to be a big stop loss. Okay. So you have to be okay with that when you take that loss, and you have to be okay with waiting a few hours, right? To know that you're offside. You have to be okay with everything that comes with your style of trading, right? That's why I recommend at least trying different styles to see which one fits you best, back test all the different styles and see which one offers you the best possibility that, hey, I probably would have been in front of the charts at this time, or I would have set an alert and I would have had time to look at the chart to take the trade. It's all based on your lifestyle, right? You have to, obviously, if you have a current lifestyle right now and you pick a trading style, that doesn't mean that you're going to stick with that trading style forever, right? Once you master that trading style and you start becoming consistent and you make this a full-time gig, if that's what you want to do, hey, anytime that my mic ain't working, please let me know, because every time I start to go from a tangent, I'm fearful that you guys aren't hearing me. It's a new fear. Anyway, right? Then once you progress to being a full-time trader, then you can experiment with different trading styles. But for now, pick a style that, works around your lifestyle, right? And your risk tolerance and what you're looking for. Yeah, you know me, I'm always gonna talk my shit. Winning or losing, I'm always gonna talk my shit, Thank you. Thank you for letting me know, though. Thank you. I appreciate it very much. But anyway, 3-step training process. That's going to be our main focus today. All right. Because I'm getting ready to put together my training. Okay. So this is my preparation for the training that I'm going to put together. Okay. I need to get my thoughts and processes out. So I'm going to be, practicing with you guys, all right, before I put that next step training together after the beginner training video, which takes people into the charts, into what they're looking for, all right, and how to back test depending on your trading style, what time-based range are you going to be using, and how to go into the charts and back test that, collect the data, see if that model makes sense, right? See if it works for you, see if you're interested in it, but step 1, condition, determine your directional bias. I'm still waiting right now for my condition to be established. Okay, that doesn't mean that I can't take a trade. Okay, but for you, you know what? Let me do it. Let me do it correct. Let me come correct. It's not a do what I say, don't do what I do. You know what I'm saying? Because we're in different experience levels. Okay, so you can't do what I do yet. Okay, unless you're experienced, then you go ahead. But if you're not experienced, if you don't have at least 2 years of experience, then don't do what I do. Do what I say. Let me preface it by saying that, because I think I I know enough to be able to trade inside of the range or without an established condition, because I can always trade in the direction of my weekly condition as well, right? So it doesn't limit me to just waiting for my daily condition, right? So I have 2 conditions, so I can trade either or. Okay, not that you need 2 conditions, but I'm just saying to have options. So step 1 is condition, right? Determine your directional bias. Before we enter the market, we need to know what direction the market is going on, and that is based on, first, your trading style, right? Like I said, your trading style determines the time-based range that you will be using. Okay, we're going to specifically focus on day trading today because that's what I'm doing, and that's what's on the chart, and that will be easy for me to give an example of, because that's what's on the chart right now anyway. So for day trading, right, you can use, there's number of options that you can do, right? In terms of the time-based range, you can use previous day's range, right? That's a preference, right? If you want to use previous day's range, you can use what I use, which is the current price action, right? 12 a.m. to 9:15, right? Note the highest high, lowest low, and the midpoint of that range, okay? The 50% of that range. Or you can also use this. Probably will be more scalping and day trading. You can use opening range from 9:30 to 10 o'clock, the highest high, lowest low, the midpoint. You can use that range as well. And you can also use first hour of trading, all right, which is 9:30 to 10:30. Okay, first hour of trading, the highest high, lowest low, and the midpoint of that. You can use that range too for day trading. Okay, so those are the time-based ranges that you can use if you want to be a day trader. Okay, so once you have your range, all right, once you identify your daily range and you mark the high, the low, and the midpoint, 50%. Okay, this is the high right here, the blue line. This is the low. This is the midpoint, the equilibrium of that range. Okay, then we're gonna wait for one side of that to get taken, right? You wait. Okay, you're waiting for the market to tell you what it wants to do. Okay, you're waiting. We're not chasing price. We're anticipating price, right? We're anticipating something to happen, and when it happens, it gives us information on what we need to do next. Okay, if this then that. All right, if this then that, right? Because that's what IFTA is doing. All right, she's coded to do, if this happens then do that. No, we're not making up our entries, mate. Don't tell me you got into something here. I have students who don't want to listen, you know what I mean? They do their own thing, which is fine. I embrace that. Okay, good. I embrace that. Like, once you understand what you're looking for, experiment, do your own thing, but don't forget the core foundations of what we're here to do, right? Of the 3-step trading process. But if you want to, like, put some flair in your trading, hey, go for it. Just don't lose sight of the foundation. Oh, yeah? You trying to rage bait me, eh? You trying to rage bait me, eh? So, Once you wait for one side to get taken, all right, so which side gets taken, that will determine your bias, your program, right, your condition for that day, for that session, for that week, for that month, right, depending on your style of trading. Okay, so let's say the high gets taken. If the high gets taken, all right, I'm going to be in a buy program, and I'm going to maintain that bias until price comes and takes the low. Okay, so that's how your bias will change. Like Monday's range here, we took the sell side here, okay, and then when we took buy side, that flipped my weekly program from a sell to a buy program, and then I'm maintaining that buy program until we come back and take this low that was created after the dealing range low was taken. Okay, make sense? What you got going on today, mate? You owe me lunch. Remember, you still owe me from the first series that we played. What are you talking about? You still owe me bagels. You still owe me that Korean place. Oh yeah, you feeling good, yeah? You awake, yeah? You awake, yeah? Let's talk about when you lost. So where was I at? So we established that, just using an example, buy side gets taken, we're in a buy program, we're maintaining that bias until the low gets taken. Okay, so until the low goes, we're anticipating that the market is going to continue in the direction of where of the side is taken. Vice versa, if the low is taken, right, we're in a sell program. We're going to stay in a sell program until the high is taken. All right, we always anticipate the market is going to continue in the direction of the side is taken until proven otherwise. Okay, until the market shows you otherwise, because it's not our feelings are involved in here, right? We're letting the market show us what it wants to do. Okay, based on a time-based range. All right. Okay, so then once a side is taken, right, the next question is, where is price? Where is price? Are we in a premium or in a discount? Okay, above 50% of the range is a premium. This is where the best selling conditions will occur. Okay, above 50% of the dealing range, wherever your dealing range is, okay, is a premium. That is where the best selling opportunities, selling conditions will happen. Below the 50% is a discount. Okay, that's where the best buying conditions, buying setups will occur. Okay, so it's not a hard and fast rule, but it's because you can also buy in a premium, okay, but you understand that you're buying, at the highest price possible, right? Preferably you would want price to retrace, all right, into a discount if you're looking for a continuation buy setup. So we'll wait to see what side of our dealing range today gets taken, and then we'll walk it through. But I'm just walking it through without having anything to back it up right now, but this is what I've been doing every day. Like, nothing has changed. Okay, this is the same thing I've been doing. I'm just more talking it through because I'm getting ready for my training. Okay, I'm getting ready for my training. So I'm using you as a practice, all right? As a practice. Okay, so premium and discount, we just talked about premium and discount. Okay, so if a buy program is established, all right, your preferable location where you want to get into a buy will be in a discount. Okay, so it would be below 50% of the range. All right, and if a sell program is established, your preferred location to anticipate a continuation sell setup, okay, would be in a premium. Okay, would be above that 50%. Okay, so when you mark your dealing range, you need the 3 points, right? You need the high, you need the midpoint, and you need the low. Okay, so you need to have all three showing on the chart. Okay, not just the high and the low. Make sure you have the midpoint as well showing, because that's a key level as well that you can frame a setup on. Okay, anticipate a setup to form around that key level as well. Okay, make sense? Make sense? Is sense being made? Are we getting it? Is it making sense? Go over everything that we just talked about. This is still step one condition, right? We haven't moved on to step two yet. So I'm just going to do a quick recap of step one, and we'll move on to step 2. So step 1, condition, determine your bias. All right. First, you need to determine your trading style. We have about 6 trading styles, 5 really that we talk about. Well, 4 really that I really want to focus on. I don't care about the other 2 really, the last 2. But I mention it because, you know, it's not up to me and what I care about, right? It's about what fits you and your lifestyle anyway. We have scalping, which is like from minutes to like a couple hours, you know, quick scalps. We have day trading, which is what I specialize in. Technically, I do these two, scalping and day trading, because some of the trades really is not like, it's not a big range enough to be like a day trade, you know. It's sometimes is a scalp really and truly. So those 2 are like, but mainly is day trading, but with scalping involved as well. Then we have short-term trading, where you're holding from like 2 to 3 days, 2 to 4 days, right? But within the week that you're done trading, right? Then we have swing trading, where you're holding days to weeks, okay, where you're trying to catch the long-term swing trade, all right, like with the trend. And we have position trading, and then we obviously have investing, which is where the 401ks and IRAs come into play there, okay? The last 2, even swing trading, even short-term trading, I don't like them just because of the risks that comes with them, okay? But as long as you have precision protocols in place for those risks, okay, and you're like I said, your risk tolerance allows it and accepts that, you're fine, right? Because we're all subject to black swan events. But overnight gap risk, that's something that comes with that comes with swing trading, it comes with position trading, it comes with long-term investing, okay? So once you establish your trading style, right, that will depend on what time-based range you're using to determine your condition, right? The range that we're using. And it's a time-based range, okay? So it's not just random, it's time-based, all right? Because IPTA runs on time. Then you're going to mark from that time frame, depending on your style of trading. Obviously, you can use different time-based ranges, okay? So depending on what you choose, I need to have the options of like the different time-based ranges depending on your style of trading. So note to self. Note to self, that's what I need to do, okay? You need the high, the low, and the 50%, okay? Those 3 key levels, all right, will be what you'll be framing your setups on, anticipating a setup to form around those 3 key levels, okay? So then you wait for one side of that dealing range to get taken, which will establish your program, and you're maintaining that bias until the other side of the dealing range is taken. Okay, so you're not like flipping bias depending on little fluctuation in price. Okay, you're waiting for something to happen to then let you know that, hey, yeah, my bias has flipped and now I'm on the other side of the market. Okay. Then after you've established a program, you want to ask yourself, where is price? Are we in a premium or a discount? So because if buy side has been taken, right, you want price to retrace into a discount to then catch the continuation to the upside, right? And if sell side has been taken, you're waiting for price to retrace into a premium, okay? Your best location to catch that continuation sell to the downside, okay? That don't mean that you're always going to catch it. Is price always going to retrace into a premium or discount to give you an opportunity? Sometimes, right, when price has somewhere to go and it needs to get there, it doesn't always retrace into a premium. It doesn't always retrace into a discount to give you an opportunity, okay? Those trades, you will just have to let them go, all right, until you collect enough data to be like, hey, I'm confident and comfortable enough to be able to buy in a premium or to sell in a discount, okay? But starting out, right, just be strict with yourself and collect the data on the other ones, right, and just see how they pan out, right? If you don't have data to back what you're getting into the market with, then you don't need to be in the market, right? You always need to have data to back, hey, I have the data to back this up, so I'm confident and comfortable in terms of if I take a loss, it's okay because my data suggests that in the long run, I'm going to be on the winning side, right? So that's step 1. Then we have step 2, stage, right? This is what sets up your trade. What does your trade look like, right? There's only 2 types of setups, 2 types of trades that we look for, right? Which is retracement and continuation, right? So you're only either going to be taking a retracement trade, right? Meaning buy side has been taken and you're trying to catch that retracement into a discount, okay? If the range is big enough and it makes sense, nothing wrong with catching the retracement down and then catching the continuation up. Sometimes it can retrace and reverse, right? We never know if it's going to reverse. We always assume it's retracing into a discount to then continue higher. but it can also retrace to reverse and take the other side. At that point, our bias will flip, right? So if you're baby trader, she's a contrarian trader. She loves her retracement setups. That's the ones that she sees clearly and obviously in the chart. So her thing is retracement setup. I don't know if she know about continuation yet, but retracement setups is her thing. That's what she sees and that's what she trades. All right. So it's a preference, right? You can either do one, you can do the other, or you can learn both, right? Wherever you see clearly in the chart to begin with, you stick with that side and obviously collect data on the other side. Okay. So retracement and continuation, those are the two types of trades that we look for. Okay. This part, the next part, how I'm going to do that. Obviously, I'll have diagrams and stuff to talk through, but for now, we don't have the diagrams. I'm just practicing. Okay. Yeah. All right. I miss. You didn't hear that? I didn't hear that. I didn't hear that at all. What are we having for lunch? I got you guys on like some noodles or something. I'll make some noodles, like spruce up, make some stir fry. I got you. Okay, lunch on me. Doesn't mean I'm like paying for it. I can make the lunch. The condition wasn't determined whether I have to pay for the lunch. I can make you lunch. Don't worry. I got you. I'll make you a little stir fry. How do you feel about stir fries? It's going to be the best stir fry I ever had. Back in school, in cooking classes, we used to make stir fries. We make stir fries, we make flapjacks. I haven't had the flapjack in so long. You don't know what a stir fry is? What? Stir fry is basically noodles, like like fried with like toppings and stuff on it. Don't worry, you enjoy it. You enjoy the one that I make. As I was saying, I haven't had a flapjack in so long, yo. Them shits used to be good. I don't even know where I can get a flapjack from, if a flapjack's even a thing here. Nothing so far for us here, all right? We haven't established a condition yet based on my time-based range, okay? So I'm still waiting. Obviously, if you're using last 3 days range, all right, and all previous days range, or 20-day range, depending on the style of trading, right? We've taken the highs, okay? So you'd be in a buy program. So right now, you'd be waiting for price to retrace into a discount, right? Which would be previous days equilibrium and below, or if you're using the last 3 days, the last 3 day equilibrium and below, or if you're using 20 days, look back period, you're waiting for price to retrace all the way back down here, right? To then catch the continuation. It doesn't mean you can't catch the retracement to down here, right? You can do that. And also doesn't mean that price will always retrace. Lunch? Oh me, that wasn't even the deal. I don't know what she's talking about. That wasn't even the deal. She got lucky in the last game and won, Just kidding. That's all pure skill. Pure skill. I lost fair and square. I lost fair and square. 2 series now. I'm down. It's 2-1 right now. 2-1. I won the first series and then she's won the last 2 series. Matting. Anywho, stage is what we're talking about. We talked about the two types of trades, only two types of trades that we take here: retracement or continuation. Okay, you can master one, you can master both. It's a personal preference, right? Sometimes you can catch the retracement if the range is enough, right, and the setup forms in a decent amount of times to get to a discount, then yes. If not, right now for me personally, I'm watching the retracement, but I'm starting to get more confident and more, what's the word, experience in terms of the retracement setup. Okay, so depending on how my back testing session goes this weekend, starting next weekend, we can start engaging in those retracements. But I'm not trying to rush anything right now. I'm only focusing on the continuation, okay? Like even me, like at my level, I'm still just trying to pick a side, focus on one side and collect data on the other side, all right? So I'm just saying, right? Don't try to be a master of both straight away. It's 10 o'clock. It is 10 o'clock. And we have, no, that's not it. We have one of the time-based ranges you can use if you're scalping or day trading, right? We have open range from 9:30 to 10 o'clock, time-based range. High is high, low is low, gives us open range. And we'll be waiting for one side of that to get taken to establish a condition for the session, all right? I always have multiple ranges because sometimes the range that I'm focused on, all right, for the daily condition, it might not get taken, right? It might be stuck inside. So I'll always use opening range or first hour of trading range, okay, to anticipate to get into something using that, right? But it's always good to have at least two ranges that you're looking at because sometimes one range won't get taken, and if you're not well versed in trading inside of the range, then you're stuck doing nothing. And there's nothing wrong with it, right? There's nothing wrong with that. No trading is also a decision, right? It's also a decision not to take a trade because nothing has formed for you in the chart, excuse me. Ding, 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 ding here. Watch if buy side gets taken. If we get a market structure shift here, I'm going to see how prices willingness to draw to the upside. I didn't forget where I'm at. We're on step 2. Stage. So when you know the direction of the market, which is based on your condition, right, your program, and the location of where you want to engage in the market, right? You still don't have a trade yet, right? We still haven't had a trade stage yet, all right? We just talked about the only two types of trades that we have: retracement, all right, where we're participating in price moving back inside of the range, all right, to potentially catch the continuation. All right, we have continuation where we're participating in the continuation of the established program, okay? We talked about ideally, all right, for continuation in a sell program, we want price to retrace into a premium, all right, to then catch the continuation to the downside. In a buy program, we want price to retrace into a discount to then catch the buy to the upside, okay? So now next is key levels and the patterns that we want, right? What sets up our trade and what does it look like, all right? So our key levels, all right, for me, we understand that IPTA moves for two reasons: to seek liquidity above and below price, all right, and to reprice into any inefficiencies above and below price. Like I said, I'm watching price's willingness to draw to the buy side here after this market structure shift here. So I'm watching this, all right, based on dealing range equilibrium, okay, based on dealing range equilibrium. All right, like I said, it's a key level that we can frame a setup on. So we trade to it once, come back up, trade to it twice, take liquidity below it here, then the market structure shift back above. I believe this is the high. This is also high here actually. So there is a short-term high here as well. I didn't notice that. The only high that I saw was here. You know, obviously pay attention to this high. So it was confirmed down here. Okay, so we're watching it down here to see how it gravitates towards open range buy side and dealing range buy side. This is inside of the range trading, okay? It's the hardest one to get a grasp of in the beginning when no side of the dealing range has been taken, okay? You're trading inside of the range. That's what that means. That's where equilibrium comes into play heavy, all right? You see along here. And it's during the macro, right? We have time, we have price, key level. This is perfect. We're talking about stage, so this is actually perfect. Bear with me 1 second. This is great. 4 contracts. So we're looking at -2 as a terminus on this trade. This is great for where I'm talking about right now, actually. No, that's not it. -2 be terminus, -1 getting hit. Stop would remain the same for me at this point. Hold on, let me. Because when it comes to execution, it's not just entering the market, it's about how you're going to manage, all right, and close the trade. So I'd be taking 2 off here at -1. My stop would remain. Why is it saying 3 now? Okay, well, 3 contracts. That means we're getting out at -1.5. That will be my terminus. So -1, I'm taking 2 contracts off. At -1.5, I'm taking 1 off, and my stop would be going to half of this range here. Okay, but anyway, this is perfect. This is perfect example of where we're at. So this is where, right, key levels plus the pattern that we're looking for, right? There's only 2 types of institutional patterns, all right? We have a breaker pattern and we have a mitigation pattern. Let me give you an example. Let's do the drawing down here. So this is a breaker. Pattern. All right. We take a short-term high here. Market structure shift back below. This is where our entry will be, where the market structure shift is at. All right. We wait for price to come. We wait, baby trader. We wait for price to come back into the market structure shift. And that's where our entry would be, all right? And our stop would go above the swing high here. Okay? Baby trader, you heard that? You heard that? Is this thing on? Tap, tap, tap. All right, that's a breaker, all right? That's a breaker. We take a short-term high above price. This is one of the highest high probability patterns in the market, okay? If you have a breaker, is high probability. Okay, for the other side, for a buy, we'll be waiting for price to do this, come down, take the low, market structure shift back above, wait for price to come back down into that market structure shift, and there will be your entry. So we take a short-term low, market structure shift back above, entry, wait for price to come back into that high. All right, that will be our entry. This is a breaker, one of the institutional patterns, okay? Obviously, in the training, I already have this drawn out already. I'll just be talking through it, and then we'll look for it in the charts as well. So at key levels, okay, let me leave it there. Let's get mitigation. Mitigation is a failure swing, okay? Price goes up. Oh, that's not it. That's not what I need. That's not what I need. Nothing happened here for me. We're still watching this trade here. Price goes up. Oh, shit. Come back down. We failed to take that high up there. Market structure shift back below. Wait for price to come back up. The market structure shift. And we'll sell there. So here, price doesn't take a short-term high. Okay, it fails to take that high, and we get market structure shift back below. This is a mitigation pattern. Okay, so these are the patterns that we look for at key levels. Okay, which for me right now, the key levels that I see clearly in the charts are liquidity. Okay, liquidity, 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 liquidity in the terms of session highs and lows, previous days highs and lows, time-based ranges highs and lows, right? Previous weeks highs and lows, previous months highs and lows, right? Highs and lows that are clear in the chart. And let's do for the buy side, for the mitigation down here. Comes down to the key level, comes back up, comes back to the key level, fails to take that short-term low there, causes a market structure shift there, comes back down to the market structure shift, and there will be our entry. So we have breakers and we have mitigation. Okay, those are the patterns that we're looking for at key levels. All right, at key levels. So in terms of this trade, bearing in mind we haven't taken either side of the dealing range yet. This is just inside the range trading. So let's assume, right? Let's assume that we've taken dealing range buy side on this setup here that we're watching. okay? Let's assume that we've taken dealing range buy side and price has retraced back down into a discount, okay? It didn't give us the opportunity to catch the retracement, which is fine. It's not always going to give you the opportunity to catch the retracement, right? The retracement has happened already and we weren't part of it. Nothing wrong with that. We're waiting for price to retrace anyway into a discount to then anticipate the continuation. Okay, we come down into a key level, right, which is 50% of our dealing range, right, is a key level, okay? So at that key level, right, we're looking for either a breakup pattern to occur or we're looking for a mitigation pattern to occur, right, in the direction of where we're looking to trade, not just in any direction, right? Right now we'll be looking for buy. So we trade below that key level right here. Let me delete the fib. We still would have one contract remaining in this trade, okay? So if it takes us out, it's taking us out at that one contract that we got left. We've taken the majority of it off already. We've taken 2 contracts off at -1. Okay, stop remains the same. I don't move my stop until my second partial. I'm zooming in here so we can see what we're doing. Here we had a breaker. Okay, so we had this pattern right here. This pattern right here form at the 50% of the range. This pattern right here, right? Since we're assuming that buy side got taken and we're looking to catch the continuation to the upside, okay? You still would be in this trade, by the way, okay? We haven't yet taken out yet. Mm-hmm. What is this? People, ignore this. Ignore this girl. She's high on coffee right now. She's high on coffee. I'm making stir fry. Mm-hmm. We're cooking up. So right now, nothing's happened with opening range. So I'll be waiting for first hour of trading range, which I will adjust to. But anyway, back to what we're talking about here. I said I was deleting this. Make it look clean. I also want to show this pattern here because that's what we're trading off right now. So retracement down into a discount. Okay, we trade to and through 50% of dealing range. All right, we come back above. Okay, right here. Right here is what we're looking at. This is the one time through. We come back above. Second time through, we take a short-term low below that external liquidity. This pattern right here, we take a short-term low right here. Okay, displacement, market structure shift back above that equilibrium of that range. This is a breakout pattern right here at the key level, okay? And within time as well. So most important thing is time and then price. So time is 950 macro, right? And the price level is 50% of the equilibrium. Here we're assuming we've taken buy side already, okay? Even though we haven't, we're just making the assumption that we've taken buy side already and we're anticipating a continuation to the upside. So we have time, all right? When it comes to execution, this is the pattern for execution. We have 4 criteria before entering the market. We need time, we need price, key level, all right? We need a swing with displacement and a market structure shift, okay? So we have all that right here. We have time, 950 macro, price comes down to the price level, all right? We have a breakup pattern. We take a short-term low below that key level, displacement, swing, displacement, market structure shift back above, okay? All right, that will be our entry. When price came back in here, that's our entry. And for targeting wise, that's where everybody will be different in terms of managing the trade and what they're doing. But that is the stage, right? This sets up the stage. The stage is the key level, all right, and the patterns that we're looking for at that key level, specifically in the direction, right? Direction and location of what our condition has said to us, okay, in terms of the first step, right? Because without step 1, you can't do step 2, okay? Without step 2, there is no step 3. It will be more succinct once I understand what, you know, what I'm trying to say. In the training, it will be definitely more succinct. This is just the first time I'm running this through. I do this every day, but like talking about it is different to doing it every day. But that was a perfect example. It's not a perfect example because obviously we haven't established a condition yet, right? This is just inside the range trading, and this is the type of things you're going to get when you're inside the range trading, right? You have to be quick with it, right? You can't be trying to hold for a long period of time when you don't have an established condition. Okay, so this is a perfect example of inside the range trading and the risk that comes with inside of the range trading. All right, even though this trade would have given me majority of my contracts would be off, it just would be coming to take me out for a small loss, right? A small loss. The trade will still be in profit though, okay, because we've taken 2 of our negative 1. uh then there you go. It's taking you out at the one contract that was remaining here. Still, it did what it needed to do, right? In terms of giving me an example to walk you guys through. We'll see if we get another one. So we did stage and execution together, right? For the execution is really about waiting for your entry criteria to be met, which we talked about the 4 criteria. Time, the most important thing when it comes to trading, time, right? Then we have the key level price. Then we're waiting for a swing with a displacement, either market structure shift, a local raid below a breaker, or a mitigation, right? We always anticipate the breaker, but if you don't get the breaker, you can always get in it with the mitigation. The breaker is the most powerful one though. Still in this retracement setup here from 850 macro. Still haven't taken that high. So looking like dealing range low. If depending how we behave at open range sell side here. Which there'll be nothing for me to do at. I'll be waiting till 10:30. Now let me catch up on this because you guys are going off over here. What? Don't worry, we don't have enough experience to trade inside the range. You could get experience right now, you know what I mean? No, me, I ain't very much domesticated. I'm like a wild animal. All that domesticating stuff is not for me, you know. That's why I'm trying to make enough money to pay somebody to do that shit, you know what I mean? That's the life I was meant to live. She don't cook every day, but she feeds me. uh, so we're taking open range sell side, right? If you're using that to determine your condition, right, you'd be in a sell program. So you'd be waiting for price to retrace into 50% of that range, which is here, this yellow line, right, into a premium to then catch the continuation to the downside. Simple things, you know, don't complicate trading. It's easy, it's simple. You just need procedures and protocols in place, conditions that tell you, hey, this is what makes me be a buyer. This is what makes me change that direction to being a seller, and have parameters in terms of when you get into a trade. What's your risk parameters? You know, where you taking profit? Where's your stop loss? Where's your stop loss, Mr. West? Where is your stop loss? Right? um Home cooked meal. You let me know what you want and I'll make it for you. Let me know what you want. I can make anything you want. Let me know what you're feeling for. I'll make it. Anyone can cook. Some steak bites. All right, all right, all right. I can make that happen. How you like your steak cooked? Got steak in the freezer right now. Can defrost that bitch. How you like your steak cooked? Well done. Medium well. Medium. All right. Okay. 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 Relax now. We don't need all that in here. We don't need all that in here, mate. This is a professional TV show. I just forgot, man. I don't know how to make them things there. I can cook real food. I forgot to add the water, you know. You like it medium? Don't worry, I got you. All right, you like a little pink in the middle? Okay, okay. Still like to see your cow move a little bit, yeah? I like it medium too, to be honest. Not too chewy, you know. Easy on the teeth. Oh, right in here too, you know. Live squid. Well, like they're still alive and kicking. I don't know if I could do that. I don't want my meat to be alive and talking back at me, you know what I'm saying? Hey, Mr. West, I was talking about stop losses here. I was talking about stop losses and needing a stop loss and using a stop loss. What you know about that, Mr. West? Oh yeah, no, we're not doing that. I'm not doing that. And you're eating it while it's still moving on your plate? Hell no. Nah. Get that shit away from me. I was going to talk about this retracement setup here. I just noticed using previous day's high, 3-day look back high, 20-day look back high. We have time 9:30. Trade up to a key level. All right. This also is a range high, right? It's a range high. So we establish a buy program in that range, right? You'll be waiting for price to retrace into a discount of the range, which is what's happening right now. It's retracing. We take a short-term high above, it's a breaker. Market structure shift back below. Got all the wrong things up here. Once, twice, takes a short-term high, back below, market structure shift. There's your entry at that market structure shift. Right in here. Stop would be above this swing. Based on a higher time frame key level, right? You're still inside the range trading in terms of based on my daily condition, right? But using a different range, right, can give you a good understanding of potentially what side of my dealing range right now is going to get taken. Okay, I was watching it from here, from the 850 macro, but it also gave me another opportunity after 9:30 to catch that retracement setup. What do I have pressed right now? Okay, lost track of what was going on. It's giving you -1. Let's see how many contracts would have been in here. Didn't realize it why it was happening. All right, noticed it after the fact. That's okay. Or 2 contracts, so we'll be out at -1 right there. Let's see what else this trade would offer us though. What is previous day's equilibrium down here? -3 is in line with that. I like that. That would be the ideal terminus for this trade because I'll be using previous day's high, right? It's framing this setup on previous day's high. So I'll be waiting for a retracement into a discount based on the previous day's range. Okay. So that would be my terminus. But in terms of trade wise, I would be out already at -1. -1.5, getting smashed. Stop would be reduced to half of this range here, which would be right here, I believe. Yep, right there. Entry was here. And we're watching to see what else will offer us here. But yeah, solid retracement setup. The time 45. Yeah. Okay. Okay. Oh, let me leave the thing we're watching that. And that will leave you not getting into this, right? Into this inside the range, because there's no point using dealing range because we haven't taken either side of the dealing range, right? So right now is, even though it's a key level, it's technically not a key level that we'll be framing anything on because we haven't taken either side of it. As a retracement set up right here, based on previous day's range, based on 3-day range, based on 20-day range. And for the day equilibrium, I just picked the closest equilibrium, which was previous day's equilibrium here. 3-day equilibrium is down here, and 20 days all the way down there somewhere. You never left the chat, mate. Moderator didn't kick you out. Yet, though. Well, there you go. They said not yet. Because you're talking madness on this chat right now. You're talking real madness. Put my business all out there. All out there. We're about to smash dealing range sell side. The setup was here using the higher time frame ranges. Okay. Trying to see if this touched as well. Hold on. No, I didn't touch it. 1030. I'm going to adjust this to 1030 low. Because now that's the range I'm focused on. This low, we'll take it down to oh, that's the wrong low, mate. First hour of oh, yeah, it's supposed to be this candle right here. Oh, mama. So long. Taking first hour of range low. Still in take dealing range, yeah. Negative 1.5 smash on that retracement setup here. Based on previous day's range and other ranges too, but just focus on previous day's range. Make it simpler. Got to smash dealing range sell side. I don't see no evil, hear no evil, speak no evil. Just yamming on his ice cream, Mr. West. Mr. West in the building. He lives life on the wild side. I'm trying to bring him to the dark side, though. It's taking time. It's taking time. It's Friday, y'all. Let's get this real quick. Bear with me. Friday, y'all. What's the request? Go ahead then. Submit the request. Let's hear it then. Let's hear the request. We're all on the edge of our seat. I ain't never rapping that, baby. Can do the wrong, I can be you. And I wanna make it $1 million, baby. It's so. Yo, what's the name of the song? Who sings that song? Secretly? Shoot me a text then. Shoot me a text. Let me get this request. Maybe I can make it happen for you. Oh my god. I can't find the song, mate. What? Like YOLO wanted to tell you, accept yourself. I'm waiting for the request. You be the baddest girl. They know this. Yeah, what's the low of this? 130. What's the low of that? Yeah, 129. The flea goes lower than that. Hey. It says 130.25. Okay, cool. It's the right low. I know you're not gonna leave us on a cliffhanger like that. Got the class on the edge of our seat here, Mr. West. Got the class on the edge of our seat. That is some real rage bait. That's the real rage bait right there, Mr. West. That's rage bait in its finest. That's what they say these days. That's a rage bait. We're tape reading today. So even if we see anything, we won't be engaging, but we'll be watching it from beginning to end. Okay? Tape reading is one of the most impactful things that you can do as a trader. All right. When you're done with trading for your week, or when you just don't want to get in the market, just tape read, right? Anticipate your setup, watch the price do its thing without no attachment to the trade. It's so soothing. It's like meditating. It's just the best thing to do when you tape read. Oh my goodness. Oh my goodness. It's unfortunate we didn't get to watch this from beginning to end because I was too busy, focused on something else, didn't see this happening at the time. But it's okay. It's okay to notice it after the fact, right? Hindsight 2020. That's how we learn. Now I see it, right? Now I see it. The retracement. We're in the premium. Best sales will happen in the premium. Best buys will happen in the discount. We were in the premium. Draw right now is to, oh, let's move this to yes. Oh, this is like this is for yesterday. I'm just gonna move it here. Already hit that draw, so I don't really want to pay attention to that. No. Equilibrium of previous day's range. Let's see if he gets there though. Taking first hour's low. Taking open range low. So for the session, suggesting the sell program. About to smash dealing range low, I think. But let's see. Let's see what it do. Ooh, do we have that? We have a lunch session sell side down here. You shut it down, down. You'll be the baddest girl around, round. And they notice you are. It's Friday, y'all. Last trading day of the week for us normal folks. But if you're a crypto fan, you keep going for 2 more days. For you, is a non-stop party. For you, is a non-stop party every day. I don't know what the volume be saying on the weekends though. But I guess they're gonna make all this 24 hours. It doesn't mean we'll be trading weekends though. I'm gonna let the market slide on the weekends. I'm gonna stick to my schedule. They are trying to make this 24 hours. I know they were talking about it. Don't know if that's gonna be a real thing and when it's going to be. I think it's gonna be a real thing, but about when it's going to kick off, I don't know. We smash dealing range sell side. We'll be in a sell program going against our weekly. Okay, but TGIF potential probably framing out here. If you don't know what TGIF is, go on ICT's YouTube channel. It's not my place to explain it. He already taught it. I just teach what I know and what I do. We was trying to dumb down. You be the best girl around. And they know. Taking London session sell side inside of the dealing range here. Still debating on whether I want to keep these. Let's see it without it on there. Hold on. Like, let's see it without them. Yeah, it looks cleaner, don't it? It looks a little cleaner. It looks a little cleaner, don't it? You know? Let's put them back and see. What do you guys think? Keep them on there or take them off? The session highs and lows. I don't really use them anymore. It's good to know where the liquidity is at. I don't frame anything around them. I just use them to see where the liquidity is at. Struggling, man. Struggling with having the clean chart. Because this does look clean without them lines there. Yeah, it looks cleaner without them lines. It's just additional lines I don't need, you know? We'll go all next week without them, right? We'll just finish out the week how we started the week, and next week we'll go all week without them and see how I feel. Okay, I have to do a week on, week off. Wax on, wax off. Wax on, wax off. Okay, so we'll do a week. We'll finish this week with them on because it's been on this whole week. So next week we'll remove them, and we'll see how next week goes without them on the chart. It's not like I really like even refer to it. I use them to see where the liquidity is at, but really and truly, I don't really. I think I'll be fine not having them on the chart as well. But we'll see what next week says. Remind me if you see it on the chart on Monday. If you see it on the chart, remind me that hey, I'm doing a week with it off. Okay, so take off the session highs and lows. We just got rage baited. People just trying to rage bait me on this beautiful Friday today, and it's crazy. First, my business being put all out there, burning easy Mac and that. Come on, man. I'm new to this. I'm not used to them type of meals, you know. I just forgot to add the water, put it in the microwave, and you know, it did what it did. We're humans. We're allowed to make mistakes. We can't let our mistakes define who we are. You know what I'm saying? Yeah, I am. I'm gonna make it. It's set in stone. You're getting your steak bites. What do you want on the side with it, though? What do you want on the side? What do you want on the side? What do you want on the side of your steak? A side of broccolini and garlic mashed potatoes. Garlic mash, you fancy. Fancy, fancy. Garlic mashed potatoes. Glass of red wine. Are you putting out after this? Are you putting out after this? I gotta know. That will determine how good the steak is. I'll set up a candle lit dinner. Are you gonna put out or what? Okay. All right. It's gonna be the best steak you ever had. You like your wine sweet or you don't mind the bitter shit? Oh yeah, that would be dope, wouldn't it? Oh, let's do that. You like the sweet wine or you like the bitter wine? We'll do sweet wine because I only do bitter. Okay, we'll do two different type of wines then. You have your bitter wine, I'll do my sweet wine. Sounds like a plan. Yeah, a bowl each sounds sounds good. 'Cause I don't do them bitter things there. I like my shit sweet, sweet and sweet. You know, like juice. 1050 macro. Give us something to end on. If not, it's okay because we had this retracement setup that we missed, but that's okay. That's okay. That would have been our morning setup right there. It's a retracement. I would be watching it anyway. I wouldn't be engaging it. Okay, so good data to collect there on that retracement setup. Inside of the range, but we had a higher time frame range inside of our range. So expect our dealing range not to get taken, and it can get taken, but expect it not to because we had the higher time frame range inside of our range. All right. It's just a time-based range within a range within a range within a range, right? Price moves from a premium to a discount to a premium to a discount to a premium to a discount based on the ranges. Okay. So it's like a dream within a dream within a dream. Inception. I need to watch that movie back. It's been a minute. Let me know when. Let me know when. I think we still got some steaks in the freezer. Let me know when you're coming. I'll defrost it, have it ready for you, have the candle lit dinner, have the outside lights on, everything set up, the wine ready. You let me know. You let me know. Once she's away, yeah? Yeah, it sounds like a solid plan. Bet that up. Bet that up. That's what the kids be saying, right? They still say that. Bet that up. Yo, I just be realizing my age sometimes, man. Like I'm so out of touch with the younger generation these days. I'm an old folk. I'm one of them old folks now. Oh, mate. Temfide. That was a solid setup right there of a higher time frame, high range retracement. Uh-huh. 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 So that's when we would ignore dealing range, okay? Because right now, neither side of our dealing range has been taken. So we would ignore it right now and focus on this higher time frame range. This is why I have multiple ranges on the chart, okay? Because some days if you're just focusing on one range, right, you're gonna miss moves. And if you're okay with that, that's okay. You don't need to be in every move, right? But I'll at least have two ranges on the chart, right? Have two ranges on the chart. For me, I have multiple ranges. I have my 20-day look back period range. I have 3 day. I just added 3 days look back period. Okay, just added 3 days. I have previous week, previous day. Then I have my dealing range, and then I have open range, and then
first hour of trading range. Got a lot of ranges, so a lot of opportunities, a lot of opportunities. So that's why I'm like, every day there's an opportunity in the market for me, just based on my ranges that I have on the chart. Okay, you don't need all of them. Okay, you don't need all of them. At least 2, 3 max. Maybe if you're starting out, you don't want to have too much shit going on. But have at least 2. Have at least 2 ranges that you're looking at. Okay, and you need the high, the low, and the midpoint of the range. Okay, the high, the low, and the midpoint of the range. You need all 3 levels there. Got to smash the inner range sell side here. What a week has been, mate. What a bloody week it's been. This week has been like the defining week. I know, like, I say something similar every other week, but this week has really been the defining week in terms of my direction, my location in which I'm anticipating my setups to form, right? My retracement or continuation to form. Okay. And it's been incredible. Like I said, the first 3 days gave it to me perfect. We took buy side. Well, it was sell side. Monday we took sell side. We retraced into a premium, called that sell, continuation sell. Tuesday, I believe we took buy side. Retraced into a discount, called that we didn't. Well, no, Tuesday was also a sell too. Yeah, Tuesday was also a sell. Yeah, it was. Was it though? The morning? Yeah, Tuesday morning. Yeah, it was a sell. we took sell side, retraced into a premium, caught that sell side. Boom. I wasn't in either trade, but like just talking about what I saw in the chart. Then Wednesday, we took buy side. I took a L by not waiting for price to touch that equilibrium. Okay, Wednesday, you were here live. You saw me take that loss because price didn't come into a discount. Okay, and I was like, the only thing I'm worried about this trade is that it hasn't touched equilibrium. So now I know I want to see that price level drop into a discount. If not, right, I'm only going to take it on the high for the continuation. Now, I don't like it to drop below the high and then continue higher. Yeah, anyway. Yes, yeah. Wednesday, took buy side, retraced into a discount, and it gave us something. It didn't go all the way where we wanted it to go, but it gave us something, right? And then it came down into a deeper discount and then continued higher. And then yesterday, there was a retracement setup I could have took, all right, in the premium. There was a retracement setup here. When I looked back on the price session, there was a retracement setup I could have took here, okay? Obviously, we were in a way deeper of a premium. Taking dealing range sell side, establishing a daily condition as a sell program, going against our weekly. Let's see if 1050 gives us anything worthwhile here. So now we've established a sell condition, right? We have our bias. We're maintaining this bias until price comes back up here and take dealing range buy side. So now the 2 types of trades that we can take, right, is retracement and continuation. We can catch a retracement into the premium of the range, all right, where we will anticipate the continuation to the downside to occur. Here's where I would be waiting for price to come, okay, to take that continuation sell side. So anything I take here right now would have to be a retracement setup if it's clean and clear, right? Sometimes it doesn't give you that retracement setup. It does its own thing and works its way up into the premium. All right. Sometimes it does give you a clear retracement. All right. That turns up to be the trade of the morning. So let's see if we get a retracement into, obviously we have 10 minutes left here. Probably let's see if we get a retracement. We're not going to get to see maybe if it continues later down the line. Take a look at your own charts and see that. But right now, right, We've established a sell program, so I'm looking to be a seller of this market. It doesn't mean I can't buy. If I'm buying, I understand it's a retracement setup, and I'm not holding, too much weight to that setup because I'm going against my bias. Okay, so right now I'd be anticipating a retracement into above equilibrium. All right, about 50% of dealing range. Okay, right here. It's also 50% of first hour's range as well here. Okay, so here's where I'll be looking for the sell. Right. Here is where I'll be looking for the sell. I also understand that the sell can form right here too in a discount, okay? But understand that you're selling in a discount, okay? We trade to it once, come back above, back into it. We have time, 950 macro, we have price, we have first hour dealing range low, and we have our dealing range low as well down here. We have time, we have price, we're just waiting on our institutional pattern to form, okay? Right here, I would be anticipating a retracement setup, okay? That fails, that's also giving me information, right? The price wants to continue lower. Like I said, drawing liquidity is previous day's equilibrium. We trade time-based ranges. We've taken a low below that external liquidity, okay? I want to see a market structure shift back above, then we'll have a breaker. And the continuation, the retracement, sorry, confirmed. But if you come back into it and we cause a market structure shift back below, okay, that would confirm a continuation to the downside. Be aware that we would be selling in a discount, right? We really want to sell in a premium. But if I'm gonna catch a continuation, and if it's not in a premium or discount, I would prefer it to be at the low or the high. This trade here would be hitting -2, so it'd be a break even right now. Okay, after 3 partials, we're at break even, and let the trade do its thing. That was a solid trade off a higher time frame key level as well. So beautiful setup, beautiful. Didn't see it at the time, which is okay. I was too busy teaching and focusing on something else. Not that I would be taking a trade anyway. And on top of that, it was also a retracement setup, and we're not taking retracement setups until after this week. Depending on how my back testing session goes this weekend, again, how I feel about it. I'm getting closer to being okay with retracement setups now that I've implemented premium and discount into my processes. Okay, it wasn't something that I was aware of it, but it wasn't something I was like paying attention to or including it in terms of whether I'm getting in the trade or not. But now it's pertinent to my processes. Okay, I need to know, are we in a premium or discount? What am I anticipating in price? Okay, just because we've taken sell side, right, doesn't mean I'm trying to sell straight away, right? I want price to retrace into the location of what I want into a premium to then catch the continuation to the downside. All right, it's about having parameters. So right now, right, the only trade that I would be anticipating is a retracement setup here. Price doesn't have to give it to me though, right? Doesn't have to give it to me. IPTA don't have to do anything that we want it to do. It does what she wants to do. We just have to let it do its thing, and we have to work around it. Like I said, market structure shift back up here. All right, we'll confirm a retracement setup, and I'll be waiting for price to come up here to then catch the continuation to the downside. what will change that for me, right? What will change that for me is we trade to and through up in here up to the lows, right? And we cause another market structure shift back below. That will be mitigation continuation sell setup, okay? That we'll watch as well. But for now, I'm anticipating the retracement. Until proven otherwise, I want to see the retracement. All right, so we traded back to and through the external liquidity. Market structure shift down here now. We'll confirm a continuation sell setup, and we'll watch it. It's in the direction of our daily condition, but it's also in the wrong location. Not the wrong location, but it's also like selling in a discount. This is where we want. This is where the best buying conditions will occur. Okay. Doesn't mean that you can't sell here. You just have to be aware of where you are in terms of your premium and discount and the best higher probability setups, right? So above 50% is a premium, below 50% is discount. When you're buying anything, obviously it's best to buy in a discount, right? When it's discount prices, right? You don't want to buy in an expensive price, okay? And when you buy in a premium, that's what you're doing. You're buying in an expensive price. When you sell in a discount, that's what you're doing. You're selling at the most expensive price. That would be at this swing high here, giving us 5 contracts. It's not confirmed yet. I'm just prepping. We get taken out here, we'll confirm a retracement setup as well. See, you're paying for premium insight. Okay, so there it is, taking that low. Now, whether we would require a body closure is something that, because we're selling in a discount, is something I need to collect data on. But you'd be in that setup right there for the continuation to the downside. If price comes and takes you out, it will also confirm a retracement setup and in a discount, which is what we're preferred setup anyway. So let's see. So 5 contracts, meaning 2 will come off at -1, 1 off at 0.5, 1.5, and then 2 off at -2. So -2 is our terminus on this trade. Well, we've taken that sell side, which was lunch session, open range sell side from yesterday. We did get body closure here as well. This did close below that short-term low there too. So if you wanted the body closure, this gave it to you as well. Oh, it's 10:10. I mean 11:10 already. What the fudge cake? Where the hell did this time go? That's crazy. Anyway, I'm watching this going into lunch now, okay? This will be a good data to collect here. And if we are taken out at this high, all right, like I said, it will confirm a retracement. I'll be anticipating price. For me personally, I'll be waiting for price to come up here to engage in the sell, okay? But still doesn't mean you can't sell in a discount, okay? We're watching it and collecting the data. moving forward, I'll be watching it, collecting the data, but I would be wanting to engage up here. Okay, so I'm gonna collect the data on these to see if it makes sense. Once I have enough data and I can confidently be confident and comfortable in those trades, then we'll engage in them. But for now, I'm gonna stick to waiting for price to retrace into a premium or discount to engage in the market. 11:11. So I'm watching this going into lunch. Like I said, if we get taken out, it's also giving me insight. We're paying for premium insight. It's also a macro setup as well. So I would be interested in a retracement if we get taken out of this. Yeah. Solid day. At least we got to watch this one. We got to watch this too, which was an example, right, of insider range trading. But this one was this was the trade of the morning here. This was the trade of the morning. We have time, we had price, we had our pattern, we had the breaker pattern form. That's what you're looking for. That you're done for the day, right? Do you need anything more? No, mate. It's giving you -2 too. We'll be at break even right now. Let's see what else it has in store for us. Let's do a trade performance review while we watch this trade. Let's see at least if we get -1 or if we get taken out. So what I did well today, all right, is that I showed up, right, powerfully. I got 1% better, gained experience, learned lessons that I'll take into my next trading day, next trading session. Showed up today and exercised discipline in staying out the market and just having a tape reading session, okay? Because not that I've had a great week, but I've had an okay week. I took 2 trades this week, 1 loser, 1 winner. That's okay with me. Just starting off, putting the brake pedals on, right, recently, and just like taking a step back and just trying to get back into what the process is, right? Focusing on the processes, adjusting, refining the processes, and not so much on the trading and the outcomes of the trade. Okay, so I'm fine with what I did this week. Okay, I took a lot out this week, took a lot out today. We got to not watch it, but we noticed this retracement setup post the setup, which is okay, right? Hindsight is how we learn, how we grow. Other than that, solid day for me. Didn't do anything in the market. Really was a tape reading session for me. We're watching this setup though. Interested to see how it plays out. Where I fell short today, I woke up at an okay hour. Okay, a little bit later than I wanted to. Didn't get my morning routine in. For the past 2 days, I've been waking up real lazy and just laying in bed and just relaxing. Just it's been hard to wake up, been hard to get up too. So no excuse. I fell short there. Didn't get my morning routine in and didn't wake up at a decent hour. Okay, it's a little bit later than I would have wanted to wake up. But we move and we digress. Next week is a new week to try again and do better on that. Ciao. We need you to go on the world tour so we can have our date. Anyway, thank you for tuning in. I appreciate you. Yeah, in chart wise, I don't think I fell short anywhere. Okay, it was a tape reading session for me, really and truly today. This morning, I decided that when I woke up, hey, I'm just gonna tape read. It's Friday. I had a good trade. Wednesday, okay, so I'm okay just ending the week on just that positive note and collecting myself and collecting the data. But so far this week has been like in terms of learning and growing, chef's kiss. Okay, that's every week though. I'm not even gonna lie, that's just every week. But this week in particular, in terms of what I'm looking for, woo, -1. We need plausible deniability. He hasn't given it to us yet. For me, I'll be getting out one, whatever this number is, -1. So 8625 or no 8825 right there, which you would have given it to me. Let's see the low of this candle. The low is 8750. Yeah, so it would have given me my -1. Stop would remain though. We'll see what else will offer us here. But like I said, we're selling in the discount of the range, right? That we are selling at the most expensive price point in terms of selling. Okay, I really want to sell up here when price is cheap, right? To sell. Anyway, yeah, I don't know if that means cheap to sell. I don't know. Anyway, how I can improve for next day, next trading session is keep showing up, right? Keep seeking excellence in everything that I do. Don't let short-term adversity losses, series of losses deter me, distract me from what I got going on. I think I got a solid foundation in terms of my model, my processes, my procedures and protocols. Now just about a process of refining minor details, right? And just being disciplined and sticking to that process in that model and not deviating from it. Okay, so yeah, keep taking small steps in the right direction, and eventually we'll get to our destination. All right, it's not about getting there today, it's not about getting there tomorrow. It's about just taking small steps each and every day, each and every session, each and every week, all right, to get me to my long-term goal. Okay, so yeah, small bite size, right? 1% better every day, and that will compound to and get me to where I need to go. Keep analyzing the data, keep analyzing the data, keep analyzing the data. As always, like I say, we're not just here collecting data to collect the data. We're collecting the data so we can analyze the data and then extract the pertinent information that we need to extract, and then refine, all right, and adjust what we need to adjust in terms of our processes, our procedures and protocols, and what we're looking for here. But yeah, other than that, solid week. Let's see what next week is saying. Let's see what next week is saying in terms of our tentative schedule for next week. We're almost done with August, you know. We're almost done with August. Well, FOMC, one stage FOMC next week, and Thursday, Forex Factory's only got two days of the week with news, but obviously our main economic calendar is Econa Day. Okay, this is our main one. All right, we just use Forex Factory as a supporting calendar. This gives us the look ahead. All right, and this gives us exactly what we're looking for in terms of what we're looking to trade. Okay, I don't get this until the week off. Okay, so that's why I have a backup calendar that shows me potentially what's coming up next. So this is our tentative schedule for next week. Obviously, we'll see what Monday, Tuesday, and Friday is saying on Econa Day next week. But for now, this is what our schedule is looking like for next week, 2-day trading week. But I'm sure there'll be something on Tuesday. I'm not sure about Friday, but Tuesday, I'm for sure definitely there'll be something on Econa Day. But Monday, I'm not sure. We'll let Econa Day tell us that for next week. But for now, this is what we have. This is what we have to look forward to. One stage FOMC tomorrow, Wednesday next week. So let's see how that plays out. Other than that, what a day. So far, every day this week, I've seen a setup that I would engage in. Not engage in right now, but a setup that I've seen an opportunity to engage in the market. Okay, and that is powerful, and that is something I'm going to like hone in and go back into this week and just further confirm. So when it comes into live price action, I'll be able to identify it easily. Okay, that this is what's happening. Okay, but so far, every day this week we've had something that we could have engaged in. Okay, whether we engaged in it and didn't, so far I'm seeing something every day this week, and that's something for me to go back in and be like, look at it, analyze data, and then try to walk it forward. Okay, but other than that, another solid week here. I'm the Trader Capital, just going and getting 1% better. I'm definitely 1% better this week, right? 100%. I know it, 1% better. It may not actually does reflect in the outcome of this week. Hold on. Let's take a look at this week. This is what I want, the dashboard. We'll do this and then we'll get out of here. Just for some transparency, you know? Still have these accounts, okay? We're going on 41 days on this one, trading days, 27, 23 trading days. This one is the one that was up, now is in drawdown. I'm taking a breather from it until they start telling me that, hey, I've 20 days of pause and I haven't taken a trade yet. These are the two I'm trading, but let's take a look at this week. Yep, this week, yeah, one trade a week so far. This week, on my losing streak, right? This week, this is the only trade I took on this account. That was the Wednesday's trade that I didn't wait for price to hit discount, okay? Took 136 of a loss. And on that same day, I took the trade that I should have waited for in the morning on this one right here. On this one. Oh, one lost last week too on this account. Okay, still in that losing streak, but I ended the losing streak with this trade here. Okay, which was a lunch session trade that I took. It gave me 5 contracts. I took 4 off, and I had a runner at break even, and it came to take me out. Is what it is. I accept that. But yeah, those 2 were the only trades I took this week. I haven't taken any trades on this account. because it's already down bad. Oh, okay. So it also took a loss last week. Okay, so oh yeah, last week 3 trades, all losses. That was a losing streak. No trades this week for this account. I'm giving it a breather until I gather myself. I'm only trading the other two until I get myself together, because this one is in deep drawdown. I don't have much left, about $500 to play with on this account, to be honest. So taking my time, not trying to rush anything. But the most important thing is that I still have access to these accounts. I haven't blown any one of them yet. Okay. So we're good. All right. Yeah, just taking my time, trying to focus on the process and what I'm looking for in terms of my processes, my precision protocols, and the outcome will come, right? Will come. But anyway, just a little transparency, a little update on my accounts and what they're doing, what they got going on. I still have them. Yeah. So I'm happy about that. This is the longest I've like held onto an account, right? Not the longest actually, because obviously I've gotten payouts before a long time ago. It's been a while since I got payout. This is what, in like 20 like maybe a year or two ago, a year ago. But those payouts that I did get, which was 3, it really like boosted me to the point where I'm like, okay, I can do this, right? I just need to take a step back. I can do this. I just need to take a step back. And the possibility was there. It motivated me to the next phase, right? To what I'm looking for. But look at this setup though. I'm happy we're ending it on here. I'm happy we're ending it on this setup, selling in a discount though, okay? So I'm happy we got to witness this, watched it happen live in the flesh. Told you what I was anticipating in price, right? I wanted to see a retracement set up, and I said what would change that for me is, right, price coming back up into that external liquidity and causing the market structure shift below. This is a negative 1.5 getting smashed. Our stop would be getting reduced here after 3 contracts coming off. Our stop would be getting reduced to 50% of this range. It's a small range. We love small ranges though. Terminus on that trade getting smashed. What a great way to end the day, to end the session, to end the week. Come on. Come on. Clap it up. Clap it up. Clap it up. Clap it up. What an end to the week though. This is what I needed to end this session today. Perfect. 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 Anyway, I was saying this was a mitigation pattern, all right, that we got here. This was a mitigation pattern. Although I wanted to see a retracement, right, I understood that price doesn't have to retrace to give me an opportunity, all right? It can always continue in a direction. Like I said, if I'm not selling in the premium, then I would the only place I would be selling is at that low, right? If it gives me the opportunity, which this one did. This is a mitigation in terms of we traded down to it, right? Came up, came back down, came back through it, failed to take this high because this is what I wanted to see for the retracement. And then we got a market structure shift back below. Guys, we failed to take this high, right? Making this mitigation entry right there, okay? Very, 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 very nice. Very nice. Very nice way to end the session here in terms of what we're talking about today. Our 3-step trading process and expectations and price. We don't chase price, right? We anticipate. We're always anticipating price with the information based on our time-based ranges, based on our 3-step process. Each step, all right, gives us information and price. Like I said, my drawn liquidity was previous day's equilibrium based on it being the first equilibrium with these 3 higher time frame ranges up here in terms of the retracement from that higher time frame range here, okay? -3 getting smashed. Nah, we don't have that here. We don't have plausible deniability, but 2.5. Anyway, we'll be at break even at -2 here. And if we had a runner, right, whatever happens here is out of my hands, right? I've taken 3 partials and I'm at break even. So best place to have a runner in terms of heading to previous day's equilibrium. But yeah, that was nice. I'm happy we caught that and I stayed to watch that do its thing. yeah, for me, I'm in a good place right now in terms of my trading and what I'm looking for. That was just the highlight of my week. That's just perfect to end the week on, and just like that. Just like that. The fact that I talked it through, what I was expecting to happen in price, what I wanted to see in price, and what would change that for me, right? And that's exactly what happened. And this is exactly where I wanted to get to in terms of my trading. And I'm slowly but surely seeing seeing it, that I'm getting to where I need small steps in the right direction, small steps in the right direction, and eventually we'll get to our destination, right? But yeah, another solid week from us here at I'm the Trader Capital, just growing, getting closer to our model, our procedures and protocols, and getting that 1% better each and every day, each and every week, right? Because that's all we can ask for here. Just -3 getting smashed. We got plausible deniability there. Stop playing with me. Let's see if we hit previous day's equilibrium. It's Friday. We can stay till 11:30. Come on now. We can do it. It's Friday. It's our last session of the week. We can see our drawn liquidity get hit here. Coming to a discount of the high time frame range. Arrivederci. Yo, that trade there, that is what I needed to be like, yes, Alice, you're onto something here. You got this, girl. You're almost there where you want to be. Just keep showing up. Just keep showing up. Don't give up on yourself, right? You only fail when you quit, right? So what that means, don't quit. Just keep showing up. Just keep showing up. Even when you feel like you're not gaining anything and nothing's making sense, just keep showing up. Keep showing up. Keep showing up here with me, with us here. I'm the Trader Capital. We'll get you to where you need to be, right? We're not on that fluffy shit. We're not here to like boost you up and make you feel like you're on clouds. If you're doing something that you're not supposed to do, I'm gonna tell you, hey, should you really be doing that? I'm gonna keep it real with you. And yeah, I would want somebody to do the same for me, really and truly. Like, so yeah, solid stuff, man. Solid stuff. Loved it today. Cool. A good set of data here for this week and for today specifically, especially for today. Good set of data to collect. Love it. Love it. All right. All right, folks. I gotta love you and leave you. We'll be back at it next week. All right. Another week to get 1% better. All right. God willing, we'll be back at it next week. But I appreciate everybody that's tuned in this week. All right. Everybody that continues to show up here. I hope you guys are getting something out of this and it's helpful. And if there's anything that I can do, all right, to make your journey easier, to help you in your journey, just let me know, right? Find a way to reach me, let me know, and I'll work on getting that done, okay? We are up and running now, okay? We do have a central hub, okay? We do have a central hub, all right? We have a central hub where, central hub, how many times are you going to say central hub? We have I'm the Trader Academy, okay? We have I'm the Trader Academy, all right? Sponsored by I'm the Trader Training Technologies, okay? This will be our training company, okay? The only trading program for traders and investors, okay? It's free to join. It's free to join. All right, we do have a beginner basic training video for you to get through, and then I'm working on getting together the next steps. All right, building your edge, getting you on the charts, how to backtest what you're looking for, decide your trading style and the range, the time-based range that you're going to be using based on your trading style, how to go and collect data and start building your edge, start getting you on the market, seeing what you need to see, seeing what you need to look for each and every day, getting that routine together. Okay, so this is a great start to your journey. All right, it gives you all the information you need to know starting out, and then obviously the next phase will get you into the charts. All right, actually charting, getting the indicators. I'm the trader in price and time indicators on your chart, and actually starting to backtest and look for what you're looking for based on your trading style. Okay, so if you haven't already checked it out, I'mTheTrader.com. All right, it's free. It's free to sign up, free to join the academy. Everything I do right now, like I said, is going to be free for the people that are interested and willing to invest their time in themselves. Okay, I'm getting now of this. Okay, I'm just putting this out there because later on a price tag will go on this. I'm sorry to say, but later on a price tag will be on this. Okay, but for now, everything I'm doing is free. Is as long as you're willing to invest the time and energy into you, into yourself and your future and your family's future. All right. This stuff here can change your family's generations for history to come. That's what I intend to do with it. Okay. That's my direction. That's where I'm going with it. So whether you want to join me, you want to do it by yourself or with us, or you want me to do it for you, okay? All those are options that you want to do. It's up to you and your decision that you want to take, right? But other than that, I'm the trader.com. I'm the trader.com. We're live. I don't need to teach that. This is me logged in already, okay? So I'm gonna sign out. Go to the home page. All right, check it out. Let me know if any way I can do to improve this as well. And obviously, when you get into the academy, the training as well, if anything I can do to make the training better and just easier to read if you don't understand, just hit me up. Like I said, I'm always looking for ways to be a better communicator, a better educator. So any feedback you have for me, I'll take it, right? I'll take it on board and adjust it. Like this, the training, it was a 1 hour and 30-minute long video, all right? And then one of my colleagues, right, she gave me feedback based on her learning style. She like, hey, it was really hard for me to sit through the whole hour, and plus it didn't save my progress. All right, so then I had to, when I come back into it, I had to figure out where I left off to continue. That was great feedback for me to get. I'm like, okay, that makes sense. I can mess with that. I can get with that. So then I decided to break it up into like a mini course, all right, into sections, so it's digestible and you don't have to feel like you're watching a whole hour and 30-minute long video in one sitting. Okay, you can break it up and it saves your progress, and you can come back and carry on where you left off. Okay, so that was good feedback for me to get, because it made me adjust what I needed to adjust for the different people, right, and their learning style, to cater to different people and their learning style. And that's something that, like, I'm craving, like feedback and how I can improve, how I can be better communicator and explain things easily for people, and how I can make this, an easier process for everybody. Like if I can cut your learning curve down by a few years, that's what I want to do, because I would have loved for somebody to do that for me. Okay, so anyway, you know me, Rumbler, Tumbler. It's Friday, y'all. It's Friday, y'all. Friday, y'all. All right. Enjoy your weekend. Okay. Use the weekend to build the life that you want. As always, your one thing you need to focus on right now is your net income. Okay. Your net income is your gross income minus your taxes, minus your expenses. What's left over is your net income. This is what you have left over to invest. Okay. And the sequence in which you need to invest is, first you invest in yourself, right? Once you invest in yourself and gain the knowledge, all right, and you have enough knowledge, you invest in your business. You are the business, by the way. Okay, you are the business. Invest in your business, and once your business starts making money and making surplus money, that's when you want to start investing in income producing assets. Okay, and those comes in the forms of a limited partnership, right, where you invest in a fund, right. The fund does, it can be a different fund, doesn't have to be a hedge fund. It could be like a real estate fund, a debt fund, different funds, right, out there, right? Invest in a fund where you're a limited partner, right? Where you're putting your money to work. Obviously, you're entrusting that GP, all right, general partnership, to do right by you and your money, right? And when they make money, money is split down to you, and that's passive income, brings you passive income. Or, all right, invest in rental properties, okay, that will bring you passive income, all right? So those are the only, those aren't the only two, but those are the two that I recommend. Those are the two that I will be doing personally, and those are the two that I have information on. I'm not going to give you something that I personally don't have, like I haven't done my research on. But do your own research, right? Those aren't the only two, but those are the two that I know of. Those are the ways that I will be building passive income. So my goal, right, is to increase my net income, all right, so I can invest in me, invest in my businesses, and then eventually invest in income producing assets that buys me passive income, which buys me freedom. Okay, the goal here is to join, once we join the 10%, is to fast track our way into the 1% club, right? We're not here to just trade and make money and go buy luxury shit that's gonna depreciate and not build any value. Right, our goal here is, once we join the 10% club, now we're on a fast track. We're close to 1% at 10% than we are from 90% in it. So our goal here is to get to that 1% club. And in order to get to that 1% club, you need to know what they're doing with their money, what they think about money, what they do with the money. Okay, so don't be an idiot, right? Don't go out today, tonight, this weekend and splash your net income. All right, set aside a small portion if you want to go outside and enjoy yourself. Fair enough, do that, do what you gotta do. but don't go blow all your net income outside, okay? Use that money, invest in yourself, all right? And then invest in your business. And eventually you want to invest in income producing assets that will buy you passive income, that will buy you freedom, because that's the ultimate goal. Our goal here is not to work till we die, right? Our goal here is to work and then put that money to work for us, right? Get that money working as harder or harder than we did to get it, all right? And then it's our job to chill and let the money do the rest of the talk, right? That's the goal, right? But go into the weekend with that in your forefront of your mind, okay? I think that will stop you. If you're going to spend money this weekend, ask yourself these two questions, right? Can you write it off? Yes or no? If you can't write it off, you don't need to spend that money. Period. Next is, how bad do I need this? Like, is this a need or is this a want? Is it something I need, right, to survive and keep going, or is this something I want, right? Because those different things. Those two things are different things. If you want it, don't get it. If you need it to survive and continue your everyday life, then yes, I'm not going to say no to that. But if it's just something that you want, you're not in a position to do what you want right now, right? Right now we're in the grind. We're in the build phase, okay? Once you have passive income, that's when you can start buying things you want. But until then, it's not about what you want. You have to sacrifice. It's not about what you want right now. It's about putting the work in to get to where you want to be, all right? Then you can afford to buy what you want and do what you want, right? When you have that fuck you money, okay? All right? Anyway, that's it from us here. I'm the Trader Capital. Let's wrap this bitch up. What an amazing week, bro.
Before we wrap up, I want to leave. There was a time that I would finish a trading session and still feel lost. Even on days I made money, I didn't really know why it worked. And on losing days, I had no system to fall back on. That's the difference between guessing and having a real edge. And here's the truth. Most traders only focus on entries, but comes from the system behind the entry. So if you've been watching and thinking this makes sense, but I don't have the full system yet, that's exactly why I created the 10% to 1% club. That's where we go deeper into all three pillars, the full model, the risk management system, principles needed to join the 1% club, and the exact process to follow daily. If you're serious about becoming consistent, that is your next step. I used to think the goal was to win more trades, but the real goal is to become the type of trader who can perform no matter the outcome. Because once you have that, the results will follow. That's all for today, folks. Thank you for tuning in. I'll see you in the next AM session, kicking off at 9:15 a.m. Kickoff once again at 9:15 a.m. To be on time is to be late, okay? So make sure you show up early. As always, I'm the trader here, signing out. Good luck, good trading, happy bloody hunting. Remember, you only fail when you quit.